Right now, no one's talking about corn because it's flat as a pancake. Beans, a lot of folks are paying attention to because it's politically driven with the trade war. And then everyone's just super negative wheat no matter what. Above all else, every government around the world wants a cheap food policy, and wheat tends to be the cornerstone of that. We're seeing Russia with their shadow fleets being hit. Like, they have targeted the heck out of Odessa, which is Ukraine's main port. There's no power, there's no water, there's no flow of rail traffic. The flow of grain out of the region is being disrupted, but on the balance sheet, it shows that it's okay.
Hello, and welcome to the Margin of Sanity podcast. Today's guest is an expert on a subject we rarely discuss in the world of equities, but probably deserves a lot more attention. Grain, which encompasses wheat, soybeans, corn, and even rice, is incredibly fundamental to, human life. After all, you can't eat a large language model, nor can you feed a semiconductor to a herd of cattle. Petroleum gets all the love, but what about soybean oil, biofuels, or ethanol? So today, the Margin of Sanity is proud to welcome the incredible Angie Setzer, aka Goddess of Grain, on Substack, TikTok, and X. Angie is a cash grain trader, an agribusiness consultant, a market analyst, and a, quote, all-around good gal. I can confirm that last bit. Angie is here to teach us, or at least me, about the world of grain. I'm calling this episode Grain 101 because we're going to start with the bread and butter before we plow into a maze of complexity. Aw shucks, was that too corny? If you like the show, don't forget to share it and drop a like, comment, or 5-star review. It's very much appreciated. And just a reminder, we're not financial advisors, and none of this is solicitation to buy or sell any securities. Always consult with an advisor. Investing involves risk of loss, so yeah, be careful. And with that, please welcome to the Margin of Sanity, the best thing to happen to grain since sliced bread, the goddess of grain herself, Angie Setzer. Thank you for coming and taking the time to talk to me today.
Oh, I'm super excited. Yeah. Thank you for having me.
Yeah, it's great to have you. And I'm super excited to talk about grain. I think a lot of people on Substack, a lot of the people that follow my Substack and everything, where a lot of us are just straight up focused on equities. Now commodities have come into play a bit, but I don't hear a lot of people talking about wheat or corn or soybeans or rice. Did I get those? That's the four grains, right?
Yeah, my biggest focus is corn, soybeans, and wheat, honestly. Okay. And yeah, outside of the realm of the ag nerds that I hang out with, I don't think many folks talk about it too awful much.
Is that the official term, egg nerds?
I don't think so. I don't think they'd like it that I call them that, but I will call myself that 100%. I am one of those people that was blessed with things like hyperfocus, and I'm just doubly blessed that my hyperfocus happens to be my job.
Yeah.
There's enough moving pieces, but yeah, that's what I'm an ag nerd, that's for sure.
I love it. All right. So we say grain. I don't know what comes to most people's minds, but there are a few kinds of grain. We were just talking about it. And generally speaking, I think many of us in the world, not just investors, but people don't know how our bread is buttered at all. Grain isn't just wheat grown for bread and things like this. This is a whole universe, a whole world, a whole giant swath of the country that's farmland, that's growing different kinds of grain and everything. So I think the best way to start might be to maybe first just step back, and you can talk a little bit about what you do and how you got into this world to begin with, and then we can just start talking Grain 101.
Yeah, so I am, as of next month, honestly, it'll be officially year 21 or my 21st anniversary of my, it's weird since I'm only 28, I don't understand how this happened because I am not here, I guess, at the age I am. And so, I grew up on a farm, but I am not one like most folks that are in my position here that trade grains, that we're a merchandiser or are merchandisers, market analysts, anything like that. They went to school for it. They either went to school for ag econ or, maybe agronomy, and they ended up in the grain side of things, or they specifically went to, end up in some type of career in farming or whatever. But I grew up on a farm, but I was always told throughout all of my existence, I'd be a great teacher. Oh, you'd be such a good teacher, you should teach. And so I went to school with the idea that I was going to be a middle school counselor, right? I was going to get my education degree and I was going to figure it out from there. I was an English major with a psychology minor of all things. And I said, I'll just graduate, figure it out, which is crazy looking back. But But I got into sales, realized I was great at sales, and ended up getting a job eventually, almost a year after graduation, as this cash grain broker. I had no idea what I was doing. You know, it was basically like on the wall. When I went in for the interview, you know, it was minus 25, the Z. I'm like, what is this letter and number thing? So it turns out that's, 25 under the December for the corn board. I joke now that the only reason they hired me is because I was willing to work for $7.50 an hour plus commission. And I was willing to work really hard to figure it out. And so I did that for about 6 years. And I learned really quickly that farmers had been kind of left in the dark when it came to how these elevators make money. Across the state of Michigan,
Right.
a lot of farmers had built grain storage over the years. They had built this storage, but they didn't know what to do with it. They maybe had missed having to deliver at harvest time, but they really just kind of, would let bushels go as they needed to, or they didn't really have any sort of marketing plans or, really anything like that. Like it was just kind of fly by the seat of your pants, which in 2005, mind you, there were stretches of time where the corn board traded at a 2-cent range for weeks at a time. So it wasn't like we were really, taking on substantial amounts of risk. But I did learn that there were a ton of ways that I could help these guys, add 10, 15, 20 cents a bushel to their stuff that they were putting in the bin if they used HTAs, if they tried to negotiate basis. And we'll get into all those words later on, but I did that for about 6 years before my former boss hired me to take over their grain marketing, the grain merchandising. It was a small country elevator, 5 elevator locations. I had never managed physical space before, mind you, but what the heck, I was 28 at the time and didn't know any better. And so I said, sure, yeah, I'll uproot my entire life, move an hour and a half away, do something I've never done before. Like, why is that difficult? And so luckily it worked out. I did that for about a decade. I managed the elevator locations. We had 5 facilities, and then we had a state of the art, this special food grade bean program, non-GMO beans we sent into Japan, mostly a lot into Europe and things like that. And so I learned a bit about that, and I helped build this direct ship business, which is basically buying from the farmer and delivering it directly to the end user. We built handling up from about 3.5 million to around 15, just under 16 million the year I left. And in 2021, basically it came up for sale. So I went to my customers and said, hey, if I left and I started a consulting business where I helped you do all the things that I've been helping you do over the years, would you follow? About 50 of them said, sure. It was a little, it took about a year. Now we're on it'll be officially year 5 as of next July 1st.
Wow.
Yeah, I help about 75 farmers across the country turn their bushels into cash. And so that's my big focus now. But part of the gig, of course, is market analysis and all of that fun stuff. like I said before, my hyper focus.
Yeah.
And so, yeah, I think that's me in a nutshell for the most part. It's a lot.
But it's all good. And you're the perfect person to do this podcast with me because I need somebody with an educational background. You're going to have to start explaining all this to me like I'm 10 years old.
Right.
So I hope you're ready for that. But it also sounds like a really worthy cause. I would imagine that, see, people talk about farmers all the time.
Yeah.
Politicians love to talk about the farmers, and I don't know anything about it. I don't really know what's going on with the farmers, And I think most people feel that way. And I'm sure, because it's a commodity business, it's probably, somewhat low margin, a lot of ups and downs, probably some periods where there's just a lot of things going on in the market that can really make it I'm guessing, a volatile business.
Yes.
Some of this is me guessing here, so you could stop me if I'm wrong. But
no, you're 100%.
A weather system or a disease, right? A plant disease, I don't know what you would call that. But
yeah,
basically whenever the market gets tight, probably it's affecting all those farmers in that region. So it's probably a tricky business. And so I can imagine that the pressing need for someone in your position who can sort of bridge the gap between the guy who's really good at getting the wheat in the first place to being able to actually sell it for a good value and maybe create a more stable business out of something that can be so volatile.
Oh, yeah, 100%.
And Lord only knows. My experience is just at the grocery store, and I know what happens when all of a sudden strawberries are $20. Everyone goes, what happened? And I'm like, I don't know, but something.
Right? There has to be something somewhere along the line.
Yeah.
That's the thing. It's a very low margin business. I always will remember, and this is something that someone had told me very, very early in my career. one of the most softest spoken, nicest Mennonite, gentleman that I work with. And he's a farmer, very, like I said, very super soft spoken. And he said, the worst part about this job is that I'm always praying for someone else's detriment.
Right.
Because that's what it is. And he said, I'm not praying for it, but it does help me out. Right. And so like what you're saying is, the hardest part is you want a weather scare. You don't want a weather scare here.
Yeah.
Like right now, so for instance, I was having a conversation with a customer of mine this morning about corn prices. Right now, no one's talking about corn because it's flat as a pancake. Beans, a lot of folks are paying attention to because it's politically driven with the trade war and the China conversation. And then everyone's just super negative wheat no matter what. So like that just feels like a constant, like just sell wheat. We always joke, sell wheat, live in a mansion. Apparently that's still the gist of what we've got going on here. And so, yeah, it's been a bit more difficult here over the last couple, but it is a rewarding gig. I am really lucky that I get to do it.
Yeah, it sounds like you really do have a need because I can imagine that being a farmer doesn't qualify you to be a trader.
Yes.
So before we get too ahead, because you've used a few terms that I'm not 100% sure what they mean. And so let's rewind and let's just start at the beginning. I'm going to name this episode Grain 101. All right. And so,
I like it.
Because that's where I need to start. I usually have to kind of go, who's got it? Who needs it? What affects this? What affects that? And we were talking about grain. So we're talking about corn, wheat, and soybeans because these are grown primarily in the Americas. We don't really grow rice in the U.S. too much.
Yeah, we used to grow a lot more rice than what we do now. Yeah,
okay.
It's not traded the same. That's one of the harder parts. Is it because it's such a niche sort of product, niche depending on how you want to put it. Yeah, rice and those types of things have gotten to where they almost detach themselves from overall fundamentals. Cotton's the same way. Like they're still there. They're still trading. Farmers are still growing them, but they're definitely a more cost intensive crop to grow than some other factors. And so you're seeing more folks gravitate towards that corn, soybeans, and wheat type rotation.
Got it. Because it's a lower cost production.
Yeah. And easier. You have more risk management tools or a deeper sort of market structure to manage your risk in, I would say as well.
I understand. Okay. That makes sense. So, So for anyone who doesn't know, right, and you can just stop me. Here's what I have gathered in my last 3 days of trying to research this myself.
Right, your deep dive.
So for those who don't know, grain is corn, soybeans, wheat, and in Asia in particular, rice. But we're going to focus on the first three most likely. And here's where you can start to help me already is, so soybeans aren't only going into foods that have soybeans in them, or like wheat isn't only going to bread. Corn isn't always, it's not like we love to eat so much corn on the cob in America that we need to, this has to be a whole industry. No, but instead, these are used to create all sorts of other things that have nothing to do with humans eating.
Yeah.
Some of them have to do with animals eating, and some of them have to do with fuel and even maybe chemicals or something like that. So maybe you can just sort of walk me through these three grains that we're going to talk about today and how they show up in the average American's sort of daily life, particularly in ways that maybe we don't realize.
Yeah, so like our usage type sectors that we have and some of these other things that are most interesting, like wheat is pretty plain and simple, so we'll start there. Wheat is basically food or feed and residual. Well, it's seed as well, but seed is a small amount of usage for wheat. Wheat is one that, you can basically reuse seed, or you can plant your own seed still, just because there's less in the way of specific traits in some of these things and things like that. And so you will see wheat have a specific usage category in the supply and demand outlook that is for seed, where you won't see that with the others. But for wheat specifically, you're looking at food and feed and residual usage. And so feed and residual as well, like you have to remember there's a residual component in there. That's a more of a junk drawer that's just poof, it's gone, or we just found these sort of bushels. But on the feed side, you will feed wheat to animals, specifically cattle. We do see some hogs get fed wheat. It helps with the pelletizing of the food and some of these other things. And so you will see certain usage of that, but wheat in particular, the biggest usage category of it is for food.
For people.
For people. Yes.
Okay.
Sir. Yes. Yep. And so what's fun about wheat though is like you have a hard red winter wheat. So like specifically in wheat, you've got different classes is what they call it. So in like the Kansas City wheat is your hard red winter wheat. That is your wheat that's planted in the Southern Plains, Kansas, Oklahoma, Texas, Nebraska, states like that they'll plant that in the fall. It's harvested, late spring, early summer. And that goes into your breads, your stuff that you think of that has wheat. Right?
Okay.
The same to be said for your hard red spring. That goes into your breads, the same sort of things, your pastas, not quite as much as like your Durham pasta. That's a different class of wheat altogether. But your hard red spring wheat is grown in the northern areas. That's your Minneapolis wheat. That's grown in areas where they can't plant it in the fall because the conditions are pretty harsh. You'll have a lot more in the way of winter kill and some of these other things. So that's going to be your Dakotas, Montana, areas like that. In particular, western Minnesota. Minnesota is kind of getting away from growing wheat just because it doesn't make money anymore. So they're going more to other crops. And then you have the fun wheat. That's the wheat I handle. The soft red, soft red winter or soft white winter wheats. Those are the wheats that are used in cakes, cookies, cereals, those types of things. That's why there's General Mills. I'm centered in Michigan. We have 5 wheat mills across the state, one of which we go into Kellogg's, we go into General Mills. You've got Nabisco that's in Toledo. That's going to be, that's white wheat for wheat thins and some of these other things. And so that's kind of summarizes your wheat side where, most of wheat is either exported to go to another country to be eaten or it is kept here to be eaten. And then a small percentage of it is used in feed for animals and things like that.
Okay.
Corn, corn is the fun one where you have all of these different usages. Did I say that? Uses. I don't know. I'm an English major. You can tell, obviously. You've got the feed and residual. That is a big component. That has always been a big component. We feed the heck out of corn, right? We have tons of animals that like it. Chickens, turkeys, hogs, cows, all around the world, we feed corn to lots of animals. And so you have a feed and residual category of usage. And like I said, with wheat, you've got the residual component. That's kind of the junk drawer that just helps us back into some of these numbers that the USDA has to back into. But what's really fun about corn as you move over in food, seed, and industrial usage is actually outpaced feed and residual. And this has been the case for a while now. But food, seed, and industrial, that includes your ethanol.
Okay.
So we do use 5.6, or the USDA is anticipating that we'll use 5.6 billion bushels of corn. Around a third, around a third of what is produced every year does go into ethanol. Another portion of it can go into other products, your high fructose corn syrup, any type of corn products, like you'll have corn fabrics or like just different types of things like that. It's not everywhere, or it's more of your corn syrup and your ethanol or in your food, seed, and industrial, to be honest. But, corn is in several places, other places. And then, of course, we export it. We ship a good portion of that to the rest of the world to either use in their animals or maybe in their ethanol production. Like you have some countries like Japan that are corn importers that are looking to increase their ethanol blend rates and things. So they're either going to have to import the ethanol as itself to blend into their fuel supply, or they're going to have to import more corn to make more ethanol out of.
Right.
Moving over to soybeans, we crush a good portion. It used to be more 50-50. You would crush half of them. You would export half of them for other countries to crush. Now we crush the majority of our beans. We produce around 4 billion bushel a year. And, this year the USDA anticipates we'll crush just under 2.6 billion of that.
Okay.
It used to be around 2 billion, so crushing has grown pretty majorly, being driven by biofuel demand.
Okay.
Both the Trump and the Biden administration had put out, these sort of recommendations that we would increase biodiesel specifically, or renewable diesel, which basically renewable diesel is basically the same as diesel, I guess they say. I didn't do well in chemistry, so I'm not going to embarrass myself, but there's 2 different types of biofuels that you can use out of soybean oil, and that's the biodiesel and the renewable diesel. But then we used to crush for meal, and we still do crush for meal. Soybean meal is, that high protein product that comes from soybeans. Oil used to be the byproduct. Well, we figured out with biofuels that oil can be the product that we actually are looking for. And that's why you've seen this big increase in crush. So basically we've seen from about 2.2 billion bushels of beans being crushed in 2023 or so, like I said, to about 2.6, just under 2.6 this year. Next year, that'll probably work towards 2.7. And so that's one of the quiet sort of things that folks aren't talking about. They're so focused on exports and where exports have been and how they are sitting now, which they have fallen. Don't get me wrong. We can talk about that too, for sure. But, crush is really kind of helping to keep demand stabilized here in the US simply because it continues to grow in some of these other things.
And so the impetus for us crushing all of those soybeans, so when you crush it, right, so it separates, I guess, you get meal is one of the products of crushing a soybean, and then the other would be then oil. Is this correct? Soybean oil, which would then be what, refined into biodiesel, I'm guessing.
Yeah.
Okay.
Yep. It can be used in food or in biodiesel or anything like that. So you can have the soybean oil, obviously, when you fry something.
Yep. Olive oil, canola oil, soybean oil.
Yep. Soybean oil. It might just be used in a blend or whatever. But yeah, it can be used as food or for fuel. That's really where that soybean oil comes from. And so before, though, it can only be used for food. We hadn't really figured out ways to use it for that fuel. And so we were crushing more, we were using more, soybean oil was super duper cheap. And folks figured out, well, hey, we could put this into our fuel tanks and use it. And so that's what we've seen. But yeah, you are seeing a continuation of strengthening in crush. And I think you'll see it simply because it makes sense for the US, to kind of focus on becoming a domestic end user, really, kind of bolster that domestic demand and then export products.
Yeah. Plus, if we can produce a lot of biodiesel fuel, conceivably, this would maybe reduce demand on regular diesel, gasoline, oil, and everything, and we'd get cheaper gas.
Yeah, that's why you've seen like India and some of these other countries lean in that direction pretty heavily. Yes.
Anything to bring energy costs down is pretty much everyone's primary focus.
Yes.
So yeah.
Yeah, and it's worked so well.
Yeah, that's okay. So that's really interesting. So now, is this the primary reason that we're not exporting as many soybeans as we used to?
It's part of it.
Okay.
Yeah. There's increased competition. So you have to, we have to look back at South American soybean production, Brazil in particular. We've seen them increase their production. I'm old enough to remember when they were barely 100 million metric tons of soybeans. This year, they're expected to produce 177 million. Wow. So even in as recently as like 5 years ago, you're talking about a difference in bushels of 1.5 billion bushels of additional production, plus some, basically. And so you've seen Brazil kind of step in and start more aggressively exporting into the world market. And so it's displaced some of the U.S. And also we have the trade war. We have the issue with China. We've seen the rest of the world kind of step up and pull a bit more than their share, you could say. It's because the U.S. beans had gotten so cheap as we worked into harvest and some of these other things. But yeah, that is part of the reason that you're seeing exports back off is we are going to use more domestically. The support underneath the market domestically keeps cash prices here in the interior solid enough to where we lose some of that business into the global market because Brazil and Argentina, they had produced more or they are entering the export market a bit more aggressively. Right. And so that plays a role. That's what's really fun about cash grain is there's all of these little intricacies that influence everything from the actual value all the way to whether or not you can facilitate the transaction in a timely manner.
Right. Right. That makes a lot of sense. Okay. So to review, let's just really, this is for me. Listeners are like, we get it. We know. Like, hang on.
Right.
So, all right, we got wheat, which is primarily consumed by people in the end. There's multiple kinds of wheat. You got 3 different kinds. One was fun, right? Which is the one that you cover mostly.
The soft wheat's the fun one.
Right, which is probably the lower protein one, I'm guessing.
Yes, sir. We don't care about protein here.
Yeah. This is for all the tasty treats. So anytime you're, get your office party and you have cupcakes and everything. And that was called?
That's your soft red wheat, your soft red winter, and soft white winter.
Okay.
Those are your soft wheats, your Chicago wheats. And those are the wheats. Chicago wheat, too, also tends to be the wheat that has more volume, more depth in it. Like that'll be where you see more speculative trading, too, is the Chicago market, simply because, Kansas City and Minneapolis can be dicey just because they're a bit thinner in some of these other things because they're so specific on the traits.
All right. So we got the soft red winter, the soft white winter, and these are both the fun ones.
Yep.
And then there's the hard red.
Yeah, hard red winter and hard red spring. Yep,
hard red winter and the hard red spring. Okay. And these vary in their protein content primarily and as well as where they're grown based on climate, based on weather. And then we have corn, which is for a little bit humans eating corn, but then also primarily for animal feed, right? For cattle and hogs. And then high fructose corn syrup and all sorts of other, what was the term you used for it?
Oh, feed, seed, and industrial usage.
Feed, seed, and industrial usage.
Food, seed, and industrial usage.
Food, seed,
Excuse me. Sorry.
Food,
it
seed,
helps if the teacher teaches properly. But yeah, it is food, seed, and industrial. But yeah, your food, seed, and industrial usage in that regard that's what covers all of those things. Your high fructose corn syrup, the seed usage and all of that. And then of course the ethanol.
Okay, got it. And then soybeans, as we went over before, these are crushed, right? They're either exported and crushed, or they're kept within country and crushed, unless you're straight up buying soybeans, which of course some people probably do.
We also have dairy farms that'll roast whole beans. That's more of a growing thing. But yeah, the majority of them are either exported or crushed here.
Okay. The end of the life of a soybean is most likely that it's going to get crushed. When it gets crushed, it turns into meal and oil, which will be used for either cooking oil or for biodiesel. And the meal is used for feed pretty exclusively, right?
You got it. Yeah.
Okay.
Pretty much. Yeah.
All right. Okay. Page 1, lesson 1.
Right? You passed the first class.
Got it.
Good job.
So before we move on, I guess to things continue on down the line, maybe we can just talk a little bit about the inputs to farmers in general. I mean, we know weather is going to be a big influencing factor. I'm guessing the major cost input is going to be energy, but maybe you can just talk us through a little bit, sort of when it comes to costs.
Yep.
What are the variables that farmers sort of face?
Yeah, the biggest thing that they face, is just the almost always elevated input costs that they're facing anymore. We'd introduced some tariffs on some of our fertilizer suppliers prior to the Russian invasion of Ukraine. So we're already seeing fertilizer prices rise. And then, of course, Russia is a very large exporter of certain fertilizers that we use. When it comes down to it, a lot of what we use, a lot of what we rely heavily upon for fertilizer in particular, which sometimes you can get away with, avoiding certain kinds, but nitrogen is one of those things that you just can't.
Right.
We've been able to see farmers cut certain corners in production and cut costs and certain things because of these high fertilizer prices. But like with nitrogen, especially for wheat and corn, you can't cut them. You've got to figure out a way to kind of get in there. And so initially that was kind of the big thing where we saw these fertilizer costs run up. We had the invasion of Ukraine again, and Russia was a large exporter of fertilizer. There was a lot of uncertainty there. You saw prices spike again. And they back off a little bit, but they really don't come back to where they're in line with where they were the last time we had front month corn trading, around $4. In addition to that, you have your seed costs, same sort of situation there. Although seed isn't tariffed, it just simply is controlled by a small amount of companies that have limited competition to a certain extent. And so basically you've got, elevated seed costs, or they have been elevated for a while now. And so you have that other variable. And then, of course, you have the weather factor, the production component, the other things that you have to look at. You have your equipment costs that they've kind of continued to rise as well. Energy costs are a factor mostly on the fertilizer side, though. And it plays a role. Believe me, I have customers that, lock in their diesel values and some of these other things. We have to think ahead when it comes to drying the grain. Maybe we need propane values, or if natural gas, natural gas will have an influence on ethanol production. Those really big cold snaps when you see natural gas spike out west. In some of those instances, you may see ethanol plants sell their natural gas back into the market and throttle back production in some of these instances, or you might just see it crush margins for a minute if they're not well covered. But from a farmer standpoint, the cost of diesel influences their overall P&L very little. Everything else just seems to be more driven by, a continuation of rising costs that never really set back even when prices do. And a lot of that could be contributed, honestly, to probably consolidation in the industry and some of these other things. But yeah, it's just been one of those deals where that's one of the biggest things that you focus on is the costs of inputs. Chemicals have gone up with trade war and some of these other sort of developments that we've seen. But yeah, it's just one of those things where that's really what we focus on.
Okay, man. That's a lot
again.
A lot. This is the thing with this, and I really hope you enjoy talking about it because there's so many moving parts
I do.
here.
Yeah.
I don't want to miss key things here, but in terms of seeds and the consolidation, generally speaking, do you think that the farmers feel like the products that these agrochemical seed companies provide for them actually help? Is it worth it? Or maybe you can talk a little bit about the value or lack of value, if you feel that way, of some of these products that farmers are buying from, I guess you would call them chemical companies or seed companies or.
Yeah. Yeah. And it definitely varies. I mean, and that's the hardest part. I actually go back to thinking about the carpetbaggers post-Civil War.
Yeah.
It's an apples to oranges comparison. Like, I realize this. Don't get me wrong in that at all. But I think about how, when times get really tough, you tend to see people. There's always a class of people that want to kind of take advantage of those who are experiencing the tougher times. And so there are some things that, farmers will raise their eyebrows to, now, or that I might raise my eyebrows to, that are being offered to farmers. Like there's tends to be when you have these types of things happen and on the chemical side, the biologics and whatever it might be, the agronomic side, even on the grain marketing side, there'll be things where, this will help you and it's not, it's magic or it's, it's placebo effect. It felt like it helped, but when actually, put to paper or whatever. And so, yeah, it gets hard. Like there's stuff that's easy at first when it's like, okay, well, times are tougher. I'm going to make these cuts. And that's the hardest part. Like we all look back, you can look at the charts, you look at the market prices and some of these other things. Like we aren't far removed from a pretty significant rally, but we're not far enough deep in it now. Like for one, when that rally happened, the spike of the costs to do business took place as well, because I mentioned the invasion, some of these other things. So margins were really tight. B, when that rally happened, it happened late. If you look at 2020 in particular, we had convinced everyone that the crop prices were going to zero before corn took off to $7 that following summer. You know what I mean? And so they hadn't been able to take advantage of it. Most of my customers were liquidated by the time we got to 450. They didn't have the rest of the time to kind of trade higher either, because that's, fool me once. And so, yeah, I mean, the hard part right now for a lot of growers is that they are cutting what they can cut, but they're getting to the point where they can't. And there is some value. Like, don't get me wrong. I have growers that tell me about the seed technology and some of the advancements and the differences in soybean seed from a yield standpoint and yield potential. The same for corn. And there's a lot of places out there that they need to have the variety that they have, or that in order for them to maximize the production and to be able to produce themselves into profit, which is the thing that you have to do in farming, there are some of these benefits that pay. And so now the constant debate, is this one of those things that is good money after good, or am I throwing good money after bad in this regard? And so that's what we're seeing a lot of now, is a lot more in the way of conversations about what works, what doesn't work. And, the unfortunate, some of it is, God, I don't want to pay this, but I don't have a different option. This is what I need, the side of things too.
Right. Okay. Interesting. That all kind of adds up to what I would guess. And generally, like a lot of my hesitation when it comes to, I don't own any agrochemical stocks or anything like that. And part of my hesitation has always been, I have this basic idea in my head that farming is a really difficult thing to do, and that some of these larger companies, either they're producing the seeds or the equipment, might be kind of squeezing farmers. And it's not even really just a moral question. I just don't think that's a sustainable model.
It's not. I as someone who's on the inside of it and sees it daily, where it's just getting worse, and not to get off topic and end up in a whole conversation about, things that should be sources of profit and things that shouldn't be. Like I come from a family that, if we could, it'd have been, Reagan next to Jesus on the mantle, honestly. Like, please don't take that the wrong way. But I honestly, that's, but we've gotten to the point that we're far removed from what we thought trickle down would be. And it's not just the agrochemical or the input side of things that we have consolidation that's squeezing producers. You look at the elevator side of the business, the commercial side of the business, the end user side of the business, and you have certain ABCDs. That's what they call the ABCDs. It's your ADMs, your Bunge, your Cargill, Dreyfus, they are running the show, and they continue to run the show. Your smaller private entities out there are less and less, and the majority of them are driven by shareholders still. And so, it's a struggle I have too. Like I said, I am a capitalist. I remember the first time someone spoke ill of trickle down economics, and still to this day, I'm grasping my pearls, because what? You can't speak poorly of that, but I mean, farming really has it's always been, the wholesale, the guy that pays wholesale or buys retail or sells wholesale, buys retail or whatever, the old line. That's always been the case in farming. But now that we are providing incentive to the companies that provide the services to the farmer, you got your Deere, you got your ADM stock, you've got all of these other instances, Corteva or whoever, your crop input side of things that is paying. I don't think Corteva is publicly traded, but I might be wrong in that. But, you are driven by profit, bottom line. And that was part of why I got out of the role that I got out of, is because it was constantly, okay, great, you made this money. Well, guess what? Our costs went up by this last year. So I need you to make another nickel. And you need to make another nickel for that because we want to make it to where we can sell this company. And so we have to make these sort of, I don't want to say exorbitant profits, but we have to make big profits in a small margin industry in order to be able to make this company look good to sell it or to convince the shareholder that they should buy. And so, who does that come from? It comes off the back of the farmer every time. It's coming off from them now on the input side and it's coming off from them on the selling side. And so, it just makes my job so much more fun to, it just gives me so much to look forward to over the next 25 to 30 years.
Yeah. Well, hey, if you ever go public, maybe you're the positioning I want. So let me know.
Right.
So we mentioned the ABCDs. And so let's just quickly, maybe we can go over those so people understand this quadopoly, the role these companies play in the grain industry.
Yeah. And so, from going back to the basics, when a farmer produces a crop every year, they have two options. They can store it to home where they're going to have to, they have to dry it. They have to get it into condition in order for it to be stored, which grain can store for an exceptional amount of time. Once it's cool, once it's dry, once it's put away, and so the farmer can do that. But if they can't, where this whole entire industry started way back when, over 100 years ago now, there used to be entities that sat in every town and basically were like, okay, Farmer Joe, you can't store all of your corn to home, or you don't have any storage at home. Bring it here. I will pay you for your bushels, or you can have storage here and you can pay me to hold on to these bushels or whatever. And then we'll sell them into the market structure later on. Because obviously in physical commodities, especially like corn, soybeans, wheat, you have harvest at one point in time. So all of the production of a year makes its way into the pipeline all at once. And so over the years, you had small town elevators dotting the landscape, and they were all maybe owned by the guy in town, the guy up the road, and maybe he owned a couple or whatever. But then as time grew, you had certain ones that stood out and have for 100 years plus. You have your ADMs, you have Cargill, Bunge is another one. You also have your Kofco, you have CHS is another. They're a farmer co-op in title, mostly it feels, and I shouldn't speak too ill because I'm not a CHS customer or whatever, but still, you just basically have gotten to where you have these major end users or major elevator companies that, they're the ones that are building the crush plants. They're the ones that are building the ethanol plants. They build the export terminals, and so eventually all grain flows to them. And that's basically how it works, or most grain flows to them. Obviously, we do have some small independents, some smaller companies that are still floating around. But for the most part in the ag industry, if you're a profitable elevator, if you're one that is doing well, that is creating competition over the years or whatever, kind of getting farmer business, this, that, and the other thing, what we've seen over the years is they either end up getting bought by the bigger elevator, and maybe that's for lots and lots of money. Or, if you have times of competition, the other thing that they'll do is just squeeze the other facility out of margin until they can buy them for pennies on the dollar, or just simply shut them down. And so that's what you've seen over the years.
So quickly, maybe you can give me a quick briefing on the business of a grain elevator in general and sort of what they do, what the business model of one of those things work. I'm about to go, Angie, I'm going to go buy a grain elevator. I don't know anything about it. Help me out.
How do you make your money? Yeah. And so a grain elevator makes their money on trading basis. And so basis, so you might regret asking this question, but basis is the difference between cash price and futures. Like you see the futures price trading today. Okay. So the March corn board today, as of this conversation is 439 3/4 where we settled today. We'll say 440 for easy math. All right. So basis is that difference. If the local elevator is paying you $4.40 for your corn, your basis is zero. It's the same as the board, right? If they are paying you 40 cents less than the board, 40 under basis is what we would call that. That would be $4 cash. If they're paying you 40 over, it'd be 480.
Okay. So like a spread.
Yeah, basically it's the spread between cash price and futures. What the farmer receives for their bushels that day and what the board is trading. And so it's a small amount of money and it is what you focus on. That and spreads, the carry between or the spreads between the intercrop year between like right now, the March and the May board, are currently trading 8 cents apart.
Okay.
And so from an elevator standpoint, most years you're going to see basis the widest at harvest. So that means that it is, the biggest difference between cash and futures. Let's say, for instance, I am buying corn at 50 under the board at harvest time. Okay. 50 under the board at harvest time. Typically, you see between the December board and the March board every year at least 15 cents worth of carry. And so you would trade your spread. You would put that 15 cents of carry into your pocket, and that would provide you the ability as the elevator. Basically, you now own that corn that you paid 50 under the December. You own that at 65 under the March. And traditionally, once we get beyond harvest time, basis firms back up because, like I said, in commodities, all of the crop flows, it used to, especially when the farmers didn't have storage, it comes to the pipeline at once. And so your cash price is going to be the cheapest when you have the most supply available. And so traditionally, once supply dries up, right, if I bought corn at 50 under at harvest time, I usually could sell that come January for around 10 under, even the board potentially. Let's say it's even the board. And so if you were an elevator, you bought corn at 50 under, you rolled your position, because if you buy the corn from the farmer, you have a short on the board. That's where you gain that money in the carry. So you'd roll your position to the March. You'd have ownership at 65 under the March board. You would sell that at even the March, if you're lucky, basically, or let's say 10 under the March. That's where your profit is. You grossed 50 cents a bushel. Let's say you bought it at...
Okay.
If you bought it at 50 under, you rolled that at 15 cents, so you went to 65 under, and you sold that at even the board, you made 65 cents. There's costs associated with that. You'll figure 20 cents put through. It's going to cost you 5 cents per bushel per month, in interest charges because you pay the farmer. There's other things in it that's going to end up kind of reducing what you're going to make net, obviously. But yes, that's how the elevator makes their money. They try to buy low and sell high.
Sell high, yeah.
It sounds silly, but it's true.
So all this, wheat starts getting harvested at harvest time. The grain elevator is sort of the middleman, I guess, between the farmer and maybe the General Mills or whoever's buying the grain. Or, so they're not really selling contracts, they're selling grain.
Yeah, they use contracts to hedge their futures.
To hedge it, right. Okay, got it. So the farmer buys his fertilizers, his seeds, his diesel, he's got his tractor, sows all the seeds. Harvest time comes, all the farmers go to the grain elevator to sell their harvest, to sell their wheat, to sell their corn, etc. Grain elevator sells to maybe a General Mills or a biodiesel refiner.
A crusher. Yeah, you would sell to a crush plant.
All right, soybeans would sell to the crusher. Okay, so that's like the basic. I feel like I have somewhat of an understanding might be a strong word, but
it's a relative term, but yeah.
Grasping your world by a pinky now. So,
right.
Okay, so we're talking before about all the different inputs and all the different costs and all the different things that can go wrong, like weather, disease, things like this. So maybe now we can talk about the other things that can happen, the man-made causes, which would be, policy, war, tariffs, maybe...
Yeah.
We could talk about subsidies as well. It's a moving target, I know. So maybe you can start to tell me a little bit about what's going on in this world now and sort of catch me up.
Yeah.
Yeah.
Yeah. The too long didn't read version of what the heck is happening in the grain market right now as we speak. And so, it's a ton of moving pieces. And honestly, I have not slept a full night since late February, 2022 when the invasion happened, is simply because we have so many things now that influence price and market moves and things. And so like right now, as a whole, I would say you're looking at by breakdown, let's go by commodity breakdown. On the wheat side of things, wheat couldn't possibly be more disappointing than anything. Like of all of crops, like wheat to me is pretty phenomenally horrible. And part of it is driven by market narrative that I think really doesn't match what's going on the ground. One of the best things about being a cash grain trader, just kind of outlining how an elevator makes money and the flow of bushels and some of these other things, there's certain truths to be held self-evident in cash. Like if basis is firming, a firming basis, if basis is improving, that spread between your cash price and futures is going away, or in the time of a positive basis, it's getting wider because we're just getting more expensive. That's not an indication that we have an overwhelming amount of supply. You don't pay more for something that you're drowning in, right? And so to me, one of the things that I really struggle with right now is this narrative that we are awash in grains, specifically wheat. The market structure itself is trading with this idea that we have, an additional 40, I think someone said today, 40 million metric tons of world wheat production year over year. That's 1.5 billion bushels of additional wheat production that folks are saying we have year over year.
Of additional.
People are saying versus a year ago, globally, we have 1.5 billion bushels more wheat available. That's part of why wheat has been under pressure. Wheat's trading down at the low end of its range. Basically, the March board has taken over the December range very easily and relatively quickly, and is now trading to what I believe is new contract lows. If it's not, we're flirting with them. But you look at the cash market, so an inverted cash market, and in other commodities or in other realms, an inverted cash market is backwardation.
Yes.
Is where your nearby markets are trading higher than your deferreds. We're not cool. We're just podunk. We're inverse and carry. We're not backwardation and contango. I wish we were, but we're not. Yeah. But an inverted market, right, is a bullish signal. Supposed to be. Right. And most folks now are trying to say things like, well, it's inverted because the cash market in the deferred sense is very bearish. No, girlfriend, it's more bullish on the front end because we're not getting supply, right? Like that's kind of how I have been trained to look at a physical market. But in wheat itself, everyone is saying, you've got Argentina with this massive record crop. The potential is there for India to have a big crop, though there are some discrepancies over what the Indian government is saying. Like there's some folks that are accusing them of trying to say that the crop is much, much larger than a year ago to try to push food prices down domestically. And so that's the struggle that we have right now. The cash market does not match what the futures market is saying and what the narrative is saying. And a lot of folks are saying that's because the farmer is holding on to an exceptional amount of wheat. Farmers cannot store wheat. Wheat is difficult to store in upright storage with airflow. Like I have thrown more wheat away in my career than I want to admit that went bad in a bin because my manager wasn't watching it closely. You can't put wheat in a bag and just leave it and forget about it. You know what I mean? But that's the narrative right now. So that's the problem that we have in wheat. The 1,000-foot view of wheat is we have too much of it. In contrast to demand, the cash market is just simply saying, to me, the pipeline is relatively well supplied, but there are risks that it's not supplied well enough, or basically, if we see a significant disruption in grain flow out of like Russia as we move forward, which I think is the potential is there, that'll be something that could be major because Russia's basically expected to be responsible for about a billion bushel plus of wheat exports as we move through the rest of the year.
I believe Ukraine is often called the breadbasket of Europe, right? This is a classic thing.
It's the breadbasket. That's what we always used to call it. Yeah.
Which is, I'm guessing, why you haven't been sleeping so well since 2022.
I haven't slept well for a while. Yeah. You just never know what you're going to wake up to. You know what I mean? Obviously. And now the market isn't really even reacting. Like we're seeing, Russia with their shadow fleets being hit, like they have targeted the heck out of Odessa, which is Ukraine's main port. There's no plower. There's no water. There's no flow of rail traffic. Like you're seeing signs, and we've seen signs already that the flow of grain out of the region is being disrupted.
Right.
But on the balance sheet, it shows that it's okay.
Right.
Like on paper, everything says it's okay. And so that's one of the arguments I tend to have as a physical trader is just because the balance sheet says it doesn't mean that's what the pipeline feels like. And in wheat, you could argue that that's the case.
Okay.
currently. And so we'll watch. Wheat's going to continue under pressure here for a bit. We've got Southern Hemisphere harvest. But then once we get into January, we're going to get wheat planting figures across the Northern Hemisphere, or at least across North America, specifically the U.S. That's very American of me to be so. We're going to get planting figures for the Northern Hemisphere. I mean, the U.S., whatever, same thing. I think it's going to start to catch some folks off guard simply because, for wheat, one of the things I can tell you is like, if you're a farmer sitting down and you're trying to pencil out what it's going to cost you to grow wheat, in order to eke out a profit, you either have to grow the biggest, most recordist crop that you've ever grown in your life, by 20 bushels, or futures have to go to $7. And so I had a lot of farmers this fall that they were like, can you explain to me why I should grow wheat? And I said, no, I cannot. And so they didn't plant wheat. And so that'll be something that we'll be watching really closely. Is I think right now there's this idea that we are awash in wheat, and that could come to a very quick change if the cash market kind of continues and you see China step into the market or anything like that. They had some pretty significant issues last fall with getting their crop planted. But, above all else, every government around the world wants a cheap food policy, and wheat tends to be the cornerstone of that. And so you're going to see this sort of narrative of, oh my God, where are we going to put it all? Even though cash isn't really saying we have it.
So are you saying I should buy a bunch of bread and put it in my freezer?
You could if you want to, but the cost of bread is probably not going to move too awful much versus, you could probably get a wheat call for pretty cheap. It might work out for you. But also at the same time, I've thought wheat was poised to do something for a while now, and I've been wrong for a while now. So, looking at corn, sort of the too long didn't read version of corn in general is we produced a hellacious crop. It's sort of the same type of narrative, right? And to me, I struggle with it. If you look at the USDA numbers, they say we produced 1.8 billion bushels of additional corn in the U.S. versus a year ago. If this were the case, we should have corn mountains. And we do in places, don't get me wrong.
Just for context, how many bushels of corn does the U.S. usually produce per year in general?
So the jump in production this year from last year, production last year was 14.892 billion bushels, so 14.9 billion. The USDA is saying this year we produced 16.8.
Okay. So a pretty substantial rise.
Yes. And one that should be obvious, right?
Okay.
Like, to me, you cannot produce 2 billion extra bushel, was 2 divided by 16. You're talking over 10% increase in production. And so I struggle with it. I do think we had a bigger crop. I think you could look at some other, factors out there. I do know that I have farmers in pockets of the Corn Belt, Minnesota, the Dakotas, in the Southern Plains, Nebraska, Kansas, in places like that their basis, that spread between cash price and futures is wider than where it was a year ago at this time, which tends to be an indication of a more burdensome supply, So you are seeing signs that there's more availability of crops in certain areas, but you're not seeing it everywhere.
Right.
Especially in the major corn producing states, Iowa, Illinois, Indiana, Ohio, down into Kentucky, Tennessee, up here into Michigan. We do not have signs that we had more corn than we did it a year ago.
Right.
And so I struggle with that. But that right now is because of that 1.8 billion bushel of extra production, basically, we have a carryout of 2 billion bushel. We have a very comfortable carry out for the demand that we have. We have record demand across the board. Feed and residual, that's a component of production. So it's hard to kind of debate whether that needs to be set back in a big way or not. Some are saying that it does. I agree. I think it could end up lower, especially if production is cut. But feed demand, the thing is that folks tend to forget about, like, the cattle herd is small and everyone wants to point to that. But the margins in hog and poultry is so great that you can afford to feed a little extra bushels, here and there and some of these other things. Yeah. Ethanol demand is phenomenal. We're waiting to get clarity from the industry or from the administration, when it comes to certain tax credits, 45Z specifically, and how some of these blender credits will work. But ethanol, we've had 2 record-setting weeks of production here over the last month, where just the most corn we've used for ethanol production of all time for that week or for a week. We've done that twice now here over the last little bit. Like, we are going to continue to use ethanol or produce ethanol. We're also exporting the heck out of it. Like I talked about, your Japan, South Korea, Europe, a lot of these countries out there are increasing their use of ethanol to help meet their climate change needs
okay.
and goals and things. And so they've been big importers of ethanol. We've had record ethanol exports for many months in a row now. And then exports, the U.S. is the only game in town. So our demand number is massive. And we're really just waiting to see if the USDA corrects the production number in January, because it doesn't really, like I was saying, the cash market itself shows the crop should be a little bit smaller. How much? We don't know, but that'll have a big influence on where we end up with ending stocks. And that's really the thing that everyone looks at when it comes to trading grains and, corn, soybeans, wheat, whatever, is, are we going to have more supply at the end of the year than we had a year ago? Is there anything that could cut into that supply that we're going to have left over? Should we be concerned about the availability of these supplies, yada, yada, yada. And so right now, that's really what we're looking at. Corn at 2 billion, not anything that we have to worry about. If the USDA comes in and says, okay, instead of 16.7 billion bushels of corn, we actually produced 16.0 or 16.2 or something like that, then we would start to have a conversation about, what happens next with corn as a whole. So, and then lastly, soybeans, it's all trade conversation, but we're also we haven't gotten biofuel clarity from the administration. Like much of what soybeans are dealing with right now is very policy driven, very politically driven. The China purchasing of soybeans and some of these other things, like no one anticipated China to be able to completely ice the U.S. out of purchases through November. Now, of course, part of that is because Argentina made some moves that provided them an ability to export more than what was anticipated, when the market moved in a way that provided some of this sort of thing to happen. But yeah, I mean, from an overall standpoint to me in soybeans right now, it's more sentiment, vibes. There's a lot of political sentiment that's driving it too. Like if I'm bearish because I'm mad at the administration and I think that they've destroyed trade, then you're going to take a lot to convince me that I don't need to be bearish. Those are the things that are really influencing soybeans more than anything right now. You have the funds dive in head first, really push this market up beyond what anyone thought was possible from a pricing sort of standpoint. We've since sold off pretty big, just on what if China doesn't buy? But in the end, I think, we're probably going to end up with carry out relatively close to what the USDA is projecting currently. But then we really can't afford to lose any soybean acres going forward. And right now we could potentially with the prices where they are. And so, yeah, things could get really interesting as we work into 26.
Interesting. So you're saying that sort of because soybean prices have sold off, farmers won't plant as many soybeans this year, and so next year's harvest won't be as...
It could be tighter. Yeah, it won't be as plentiful or won't be as concerning. And what would be even more worrying, not worrisome necessarily, but what could be even further catalyst is if Xi and his team do plan on following through with the 25 million metric ton of purchases, things could get really interesting as we move forward. And right now, we have a lot of negative sentiment. We're really struggling overall with a drag in data, to not get the commitment of traders reports out. We just learned yesterday or last Friday, basically, that the speculators, as we spiked into the November 18th high on soybeans, the speculative buying also spiked. It was almost a record long, on the speculator side. At the same time, the farmer was selling the hell out of it though, so you had the farmer kind of absorbing some of this speculative buying. But yeah, to see a drag in that, to see a drag in the export sales data, you have a lot of folks now that are trying to give us insight into export pace from data that's over 4 weeks old. You can't really do that. There's been a lot of changes in this market structure over the last 4 weeks or so. And so, yeah, it's just, we're struggling with a lack of clarity, a lot of political influence in the bean market specifically. And then, the farmers hate growing soybeans. And if you keep soybeans, priced around $10 or less than $11, they're not making money growing them either. They're just not going to.
Why do they hate planting them?
Because they don't tend to give them the opportunities that you get from corn. Like from a yield standpoint, I had an old guy one time tell me that like a good year in soybeans is 3 bushel difference than a okay year. Like a great year in soybeans is 3 bushel better than an okay year, and 3 bushel, 6 bushel better than a really poor year. Like the yields don't really stretch. They don't get a lot of that for one. And it's just can't make money. The market structure itself is somewhat poor. Basis tends to be wider at harvest time because farmers tend to bring them into the market before they bring corn, those types of things.
Got you. Super interesting. So, we sort of talked about cyclical things that are going on right now, trade, policy, maybe whether commodity cycles have their own, life. And I'm kind of curious what you see as the structural shifts in the grain industry in general, whether it's the farmers, the elevators, the seed companies. Farming isn't only going to change so much. I realize that. But, what do you sort of see as the direction of the entire industry? Where do you think it'll end up 10 years from now?
I think you're going to see big farmers or the farmers that are managing their operations like businesses. It's unfortunate, but you're going to see the big get bigger. I think you're going to see the farmer get more educated. And when I say educated, I mean in merchandising specifically, to where they are as good or better than some of these originators, merchandisers that some of these elevators have on hand. You're going to have a middle management problem in some of these big elevators and things. You already do have a really bad middle management problem. And so I think, in my opinion, and this might be driven mostly by my business model and some of these other things, but I do feel that this is the direction that the farmer heads, is I think the farmer starts to turn themselves in or starts to operate as though the elevator used to, that middleman. They look at themselves more as a middleman. They start to market more or make marketing decisions or business decisions based more on the margins that they're making. They have the ability to hedge, via crop insurance, via options, via, outright sales contracts and things like that. And then they get to where they're negotiating basis with these end users.
Right.
To me, I think that's what you see. I think you see further consolidation, unfortunately, in the industry in a big way. That's part of where my goal comes in, is to try to educate some of these younger folks out there so they're able to merchandise. They're able to trade their grain as an elevator would. I think that's what we see. I think you see less competition. Unfortunately, I think margins are probably going to get tighter. I do think on the input side, we start to go back. I think you get so far and then you start to see a reemergence of independence and competition and some of these other things. I think we get there on the crop input side, potentially. I don't know how we manage the fertilizer necessarily, but I think when it comes to some of these chemicals and seed and some of these other things, I do think you see some more competition come back in to this market structure. I just think you see more in the way of fine tuning and education and refinement and all of these other things. And it just kind of continues to improve from there.
Okay.
And probably gets a lot less fun.
Yeah.
That's the hard part. Everyone tells me how less fun it is, and I can agree with that. But yeah, we got to run it more like a business. That's for sure, or we're not going to survive.
It makes sense. I mean, at the end of the day, market forces are ever powerful. My final question, which is probably interesting to a listener if there's a good answer for it, but there might not be one that exists.
Yeah.
Look, I'm an equity investor. This is what I write about primarily. And I also like to just learn about how everything works. And so I try to put those things together. And so if you were sort of looking at advising an equity investor or something like that, not that that's what you do or anything like that. None of this is a recommendation to buy or sell any securities, but
thank you.
Where might you look in the world of grain and agriculture in general for opportunities?
Yeah.
Where might you look? I'm not necessarily looking for ticker symbols, although they're appreciated, but I am kind of curious, what pond might you go looking to fish in if that were something you were interested in doing?
I wouldn't be afraid to look at maybe some of these elevator companies, your ADM, your Andersons. Andy is one, ANDE. The Andersons, they're a small elevator that is probably, I think they're really working to poise themselves to be bought and probably bought well. I think they're one of the companies out there that is next in line to have, to where they may not exist. I don't know. They've been rumored to be up for sale a couple different times now. And so I would watch them. I haven't seen where their stock's trading, so please don't be mad at me if they're at a multi-month high or something.
Right. Yeah,
Don't do it then. But, one of those things that I would look at is something like that. I wouldn't necessarily go to deer stock. I think Kramer said deer stock after the USDA announcement, right? But I wouldn't necessarily look in that direction. The farmer isn't going to spend money on new equipment anymore. Right. It's going to have to be something to do with the crop production side or, even a land side or something like that is what I would look at. Also outright, I would look at owning, wheat calls. I wouldn't be afraid of that. That's not, not a trade wreck necessarily, but if you look at where wheat is trading in July, 26 wheat at 538 is ridiculous.
Yeah.
That is way too cheap, in my opinion. It doesn't mean it doesn't get cheaper, but I think that is way too cheap. If that maintains that pace and we get into March, you are going to see epic abandonment.
Right.
Because if you're talking 538, like, and when I say abandonment, that means that they'll plant something different. They'll tear it up. They'll put something different in, or they'll just graze it. Like in the Southern Plains, like you might see acres there, but they'll just put cows on it until it's not wheat anymore.
Right.
And then maybe they'll throw corn in it. Maybe they'll put soybeans on it. Right now, corn would win versus wheat at 538.
Right.
I mean, I guess you could look at that if you wanted to. Wheat feels the cheapest to me out of anything. And overall,
what about, who makes the stuff that dries the grain? You were saying before how important it is that you properly dry it.
yeah. So you could look at grain storage. Yeah, like Sukup, I'm not sure if they're publicly traded or not, but you've got a couple different grain companies. Sukup's probably one of my favorite, Sukup. They're out of Iowa. But then you have like, there's Brock. There's a couple other grain bin companies out there. I'm not sure if they're publicly traded or not, but you know, that would be one thing that you might want to look at as well, is the farmer is going to find ways to keep their grain out of the pipeline, because that's what they're, like we were talking about before with the elevator. You know, the elevator made 65 cents on that deal. So did the farmer.
Yeah.
Holding on to bushels. You know, I had farmers this week that instead of selling corn at $3.75 at harvest time, like they would have had to if they'd have liquidated that day, they sold bushels for $4.50. Because the board popped, basis firmed, you know, all of these other things. And so yeah, I mean, I would look at grain bin equipment or something like that. Yeah. But yeah, overall, it's a tough road to hoe over here.
Oh, yeah. Well, it's what we expect. But usually, you know, weirdos on Substack and value investors, we're always sort of looking at like, who's everyone been hating on for the last 10 years? Let's go look for value there.
Wheat definitely.
Wheat. It sounds like wheat.
I mean, wheat took an adventure, we took a big adventure after the invasion. And then once we stabilized the flow of grain out of the region, everyone stopped paying attention.
Right.
Because we went back to normalcy. Across all of Ukraine, we basically went back to normalcy. You had all of the air defense systems that you had. Russia really was only, you know, focusing on that Donbass region and the regions to the east. Occasionally Kyiv and some of these other places, you know, would see a target that might sneak through. But for the most part, it all was well. That is not the case anymore in wheat at all. Like you're logistically speaking, you look at Russian wheat exports. Like, yeah, they were great in the month of November, and everyone just focuses on this 1 month where they actually met old pace, you know, because they've taken 2 months to get everything staged. Like, yeah, if you want to look at something that is definitely a value, comparatively speaking, you know, wheat stands out to me.
That's, it's also really just funny that there is such a wheat bias.
Yeah, like we just hate it.
But whenever the narrative doesn't match what's happening on the ground, I think there's usually an opportunity for investors. I'm not personally I'm not a futures I'm really not even a commodities guy. It's kind of crazy that but I got into metallurgical coal, and then I started getting interested in commodities in general, just how things work. And now I'm here talking to you, but I'm so glad that I am.
I'm glad you are too. It's fun. It's fun. Like I said at the beginning, you know, I always have something new that I get to hyper focus on, you know, from one week to the next.
Amazing. Angie, thank you so much for taking the time to talk to me. It's really genuinely such a pleasure to learn all of this.
No, thank you. Thanks for having me. I have enjoyed the conversation. I could talk for hours. That's what I always say, you know, that TikTok trend, you know, someone talking about Marie Antoinette. You want to talk about cash grain? I am your person, because I could talk about it for hours.
Perfect. Well, and you do, and I will direct everybody to your Substack. Do you have like a Twitter or any other social?
Yeah, you can find me. You can find me on Twitter at Goddess of Grain. And I'm also on TikTok at Goddess of Grain as well. And that was a joke initially, honestly. Like, it's funny. The Twitter started it all. I was like, I'll call myself the Goddess of Grain. And like the guy I worked with, my coworker at the time, he's like, oh my God, that's hilarious. And it's stuck, but it definitely is not how I see myself at all. I can tell you that.
It's totally how I see you. You are my go-to grain person. I'll tell you that right now.
Thank you.
Thank you really so much for coming on and talking to me.
No, thank you. Let me know if you have any other questions or anything like that at all. Just give me a holler, and you know how to get a hold of me.
Beautiful. Thanks for listening to the Margin of Sanity podcast, and a huge thank you to Angie for coming on today. Sweet as corn syrup, if you ask me. Angie Setzer is at Goddess of Grain on Substack, Twitter, and X, and even TikTok. Such a pleasure having her on. Margin of Sanity should have one more episode before the new year, and if you've just stumbled upon the show, just FYI, there are many more episodes for you to enjoy on that long trip home for the holidays. Merry Christmas and Happy New Year. I'll talk to you later.